This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In tonight's video, I'll be going over the data sets, and I will be doing a quick technical analysis over the SPY and the ES main. Now, I am having a really bad ear infection right now, so my ears are absolutely in a ton of pain. So if this video is fairly short, I apologize. I'm going to try to really cram everything that I need to get into this video. So with that said, let's go ahead and jump straight to the data. The data for Wednesday, January 7th, came in fairly cool slash dovish. We had the ADP. We talked about how we did anticipate a positive reading this time, but it still was a bad reading. It still was a cool reading. The factory orders again showing continued downtrend in the orders. The ISM manufacturing employment actually did see a little bit of a rise, and not just a rise above that 50. So that shows a little bit of growth. So we do need to see more numbers. This is again just one reading. There's a lot more to the story than that. So ISM non-manufacturing PMI and a little bit higher. That's somewhat anticipated as, there still is. Now, I say inflation's defeated, but there's still a little bit of pricing inflation that's being picked up here and there. Now, overall, I do think inflation's defeated for the overall consumer. I do think that we will be seeing a downtrend. We should be seeing that throughout the CPI, PPI, and everything else. Now, with the JOLTS job openings, they came in extremely poor. Now, the JOLTS numbers should be above the 8 million mark. Um, we're almost a million jobs below where we need to be right now for the openings. Now, granted, this is for November, but with that said, that means that nobody was hiring seasonal workers pretty much at all. The job openings are just continuing to decline, decline, decline. It's not a good thing at all. See, crude oil inventory, we don't care about that. Let's see, earlier, Friday. Okay, so that was Wednesday's data. Sorry, it's hard for me to think right now. Um, Overall, I feel that the data sets did come in fairly cool. You had a few of these ISM data sets that came in a little bit over what we anticipated, but for the current moment, it's okay. Thursday, January 8th, have the initial and continuing jobless claims and the exports and imports, and a lot of the NFP data. It looks like this won't be the main NFP, that is on Friday, but we still have the non-farm productivity quarter over quarter for quarter three. Trade balance, that's not super big. Unit labor costs, not a super big deal. So the 8:30 time slot will be very important, mainly for the non-farm productivity and the initial and continuing jobless claims. Now, they're expecting a higher number on both the initial and the continuing jobless claims, meaning more people are unemployed. I definitely agree with that. I think we should be seeing much higher numbers on these, very, very likely. Exports and imports, they get plugged into the GDP calculator. So very important numbers, even though not a lot of the market participants are looking at it. But um, the imports have been really, really low. So that's been heavily boosting the GDP numbers. When we're not importing goods from other countries very much, then it sits as cash in our, in our GDP basically. So it looks very positive, but that's not always going hand in hand with what's reality. So that's just something to think about. And we kind of talked about that when I showed the other numbers compared to the GDP, the actual, what the name was it of it right this moment, but The numbers that the Fed actually look at compared to the GDP because they believe it's a better reading than what the GDP is. Excuse me. Now at 11, we have the New York Fed 1-year consumer inflation expectations. They're not showing a forecast. The last reading was at a 3.2%. Um, I'm very, very likely going to say that's going to be pulled down to about 3%. And I'll show why in a moment, but the 1 year for the CME FedWatch is still showing quite a bit of movement to the downside, meaning a lot more federal rate cuts. At 12 p.m., we have the Atlanta Fed GDP now. Again, that has been pulling down. The forecast is expecting a 2.7. I'm expecting, kind of less than this because I've been seeing weakening in the numbers, weakening in the labor market, and I think that's really going to start transitioning into showing a weakening GDP. So, to me, that's going to be very, very important. I don't believe we'll see it pull up. I'd actually be surprised at this point. Um, yeah, but this isn't a very, very large number. In terms of it moving the market or not. The market usually doesn't move around the Atlanta Fed GDP now. It's only done that, I believe, 1 or 2 times in the last, geez, 4 or 5 years. I've been tracking the SPY just super, super, super diligently like this. Um, it's not very often that that data set moves the market.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
I really just briefly wanted to start this video off with the ES main. This is basically the SPACs. Now, I know many of you are concerned that we're breaking or we're getting very, very close to the top of a buying channel. Now, many of you very, very likely do not have your channel set up the way that I do. And I'm just going to very quickly show you how I set it up. This is the weekly trend. So this is capturing all of the bullishness we've been seeing. Okay. Now, there's a couple different ways that you can trend this. We can start at the low of 2022, which is really when we kind of left the recession. And we did have a very small recession. That's when we left the recession, and that's when we started to see, a lot of the buying in early to mid 2023, seeing the early tech rally, or the early Nvidia AI rally, seeing the massive pull down, and then the bounce from there. Now, many are concerned that we're breaking that buying channel. I don't agree with that just because I don't consider this the primary support for all of this buying. Um, the reason why is because this massive structure had to start from somewhere. Okay. Um, this selling structure had to start from a buying structure. And what we're doing here is accurately capturing that buying structure. Um, by placing our top resistance at the very, very top point of where the buying ended to create this major rally structure, that's how you determine your major buying channels. And so that's why I'm marking this support literally way back in I want to say 2019, 2020. Yeah, it's 2020. And then the dip we had in 2025. So that's kind of how I trade my structures. I go from seeing the buying and where the buying ends is very, very crucial. Um, and I want you to kind of think about this chart from the perspective that none of this current price action exists yet. Now, if we're looking at this chart currently, it would then start selling downward, and in this channel right here, most people would mark that as the bottom support. So even doing that for the previous channel, many would have said that, okay, well, then we broke channel right here. Um, that's not the case because again, you do have this structure creating all of this buying. All of this buying from here has been created from this selling. Okay. Now, all of this buying has been created from all of this selling and whatever structure is prior to that. That's how you get your buying channels. Um, so that's why I'm not exactly just marking that as the bottom support. I'm marking this as the bottom support for this entire channel because here we see this exact same thing. See that selling turn into massive buying continuing up this same channel. So am I worried about us hitting the top of the buying channel right now? Um, no, not yet. We still have plenty of room, especially seeing how this is the SPACs. We have close to, see, that's 720.52. So almost a $300 upside still. That's assuming zero consolidation, zero support retesting, anything. Excuse me, I'm losing my voice. But that's considering we just go straight up. So, we still have plenty of room because remember, this price action, very, very likely, I'm expecting it to pull up a little bit, but from that pull up, very likely it will consolidate downward a little bit, maybe even try to take this selling structure right here. Because remember, no buying or selling is arbitrary. It's all done for a reason. So any selling we keep track of. Is this going to be potentially the start of a major selling channel going towards the bottom of the buying channel here? Maybe. I'm not sure yet. We will, time will tell, but that's how we will continue onward. Now, the way we break this channel is when we have a structure that truly, truly breaks us out of this channel to the point where there's no redeeming this channel. For example, if we started to get some crazy structure pulling back up here and then back down there and then back in here, would that be the same buying channel? No. There would be a selling channel in here and then you'd have to start forming a new buying channel. So that's what I'm looking at for the ES main, which again is the SPACs. So this does kind of cover a lot of the SPY in total, and this is the weekly time frame. So this can be a little deceiving as it's granted, going over the weekly time frame. Now, with that said, let's go ahead and jump into the SPY, and I'm going to set the daily time frame. Let's go ahead and ignore drawings for now. Set the moving averages and Bollinger Bands on, and let's get right into it. Now, today, it looked like a bearish day. However, today's a bullish day, and I'm going to tell you after I stop losing my voice and exactly why that is. Um, it's a bullish day because the 5 mile is going to continue still pulling upward. The 5 mile is the closest support that we will ever have in any situation. It doesn't matter if we're literally directly on top of the 20 mile, the 5 mile is closer because in terms of duration, it only takes 5 days for any price action to meet back up towards that 5 mile or for the 5 mile to pull towards your price action. Takes 10 days for the 10 mile, 20 days for the 20 mile. So those other major support ranges aren't something that can be heavily relied on for an extremely long-term trend. Meaning, if you're trying to follow the 5 mile up and down this channel, um, obviously the 5 mile is going to move faster than any one of the other moving averages. So it's going to tell you a lot of clues that these other moving averages can't tell you as quickly. Now, reason why I'm bringing this all up, and let me make sure the moving averages are showing up on screen. There they are. The reason why I brought that up because many are talking about this range where they're seeing the moving averages um, starting to heavily consolidate, or they have been heavily consolidated. Now, many are assuming that they saw the 5 mile pull upward, saw a rejection of the upper Bollinger, seeing the 5 mile pull back downward, and that is going to lead into a longer consolidation, and this is going to pull downward because of that. Um, I think that's a decent, an all right thesis right now. However, the reason why I disagree with that, and I wish I didn't have all the drawings being all messy for a moment, I'm going to turn off the moving averages for a moment. But ever since we've been tracking this massive consolidation, ever since we've been tracking this massive bullish structure, and it really started at the top of right there. And again, we just closed this massive cup. Now, from this massive cup, and I'm going to turn off the Bollingers for a moment. Let's go to the 4-hour time frame just to better see this. From that massive cup, we had, let's see if it's all set up right. From this massive cup, we had an additional bullish structure form, and this was not the top of the cup here. There was still quite a bit more room above this cup top to really solidify that this was going to be the top of the cup or not. Um, we did not see the bearish structure being built there. Instead, we saw a nice nested cup forming. We saw the inverse head and shoulders being built on this major buying channel. We had this very potential selling range created at the bottom of this buying channel where if we entered the selling range, if we started to form major structure in there, then it would have really spelled disaster for the SPY. Well, that was heavily rejected. Um, bearish structure, that's what pulled us downward towards that range in the first place. From that bearish structure, we see exactly what we wanted to see on a cup and handle, and that's the bullish structure pulling us out of that range. Now we're back up at that top of the cup, and I'm going to delete this larger cup here just because I want this to be a little more visible. But now we have this very nice cup formed here. From this very nice cup that's formed, we have exactly what we're looking for on the top, which is again, and I'm going to color this in purple as I always do, the bearish structure we're looking for at the top of a cup and handle. And from that bearish structure, we anticipate bullish structure. And the reason why you anticipate the bullish structure is because that's how you get the handle to the upside. Okay. And that's how you get your new all-time highs. So with that said, and understanding that we did expect some bearishness in here, it's very hard to be actually bearish with the structure because so far I'm seeing a lot of bullishness. And this actually reflects across a lot of these major symbols right now. So SPY, QQQ have the exact same thing going on in here. Sorry, there's some older drawings. But we have the cup with the nested handle formed. With this nested handle being a cup and handle itself, that's looking very good for the breakout. Let's check semiconductors really quick. Semiconductors seeing a little bit of the same thing, where only except this cup is a little bit extended, and that's okay. Sometimes that can happen with cups, but it's very likely it's just working on that bear structure to create that handle downward. And from that handle downward, again, looking for the bullish structure at the bottom. And from the bullish structure at the bottom, that's how you get the liquidity to push upward. Now I draw these handles fairly low. Sometimes they're not that low, sometimes they're very small. And that's kind of what I'm expecting with the SPY here. So I'm going to turn off the drawings and turn the moving averages back on. But keep in mind what we're looking at with the drawings, okay? So I'm going to go back to the daily time frame and I'm going to turn on averages and Bollinger's. Now here is that cup that we just talked about, the one that was formed and that we saw the bear structure forming at the top of the cup, pulling down. Okay, well, what's pulling up tomorrow? The 5 mile. The 5 mile is going to be probably around that 688.20-ish range. It might even be a little higher. The overnight right now is at 687.22. So technically we're already within that range. Um, that looks like a very, very strong buying window to that upside. Now, the bearish thesis on this is that this is actually a double top right here, that this isn't some massive bullish structure like I've been talking about. This is just consolidation. And in this consolidation, that this is just a double top or, you know, forming some larger bearish structure. Completely okay. Again, I wait for the upper Bollinger. For me, this wasn't that scary range where I talk about being above the 5 mile and below the upper Bollinger. This is the type of range where tomorrow we're going to see the 5 mile above the 10 mile, 10 mile above the 20 mile, 20 mile above the 50 mile, and that's exactly what I'm looking for bullish upside. Um, all the moving averages are going to be positioned exactly to push upward. The upper Bollinger will extend upward slightly more tomorrow. So it'll be probably opening around the 697 range. That means if we're going to have the upper Bollinger move occur tomorrow, we basically need to close at or above the 697 or wherever the upper Bollinger is actually marked at. Now, again, the overnight price I feel like is being very, very deceiving. I do feel very, very heavily that we will again test that 5 mile and from that 5 mile test head to the upside. We do have very, very important data that's coming out the next two sessions. So I do believe that there's plenty of room to kind of flip the tables on this selling that's being done right now, which I really don't consider this selling. Um, and I'm going to show why really quick. Reason why I don't consider this selling is primarily because of the VVIX. Now, today we did see it pull up a little bit, um, but it only pulled up to the 91. I want to say during the actual intraday, it did pull up to the 92, but it was sitting around that between the 90 and the 91.60ish range, for a very, very long period during the day. Now, knowing how the VVIX works, understanding our levels, that puts us in consolidation slash chop range. And at the very low range of that, for me, that's still a bullish range to be buying the SPY in, because we're not close to the selling range yet. Now, if we get bad news in the pre-market tomorrow and we see the VVIX starting to really push up towards that 98, then that definitely changes the narrative on whether I'm bullish or not on the SPY. Because if this starts pushing up to 98, extremely likely we will be pulling downward on the SPY. Because again, this is, the red light, yellow light, green light. This is telling you exactly when to buy or when to sell, kind of, sorta. And if we're in the consolidation range, for me, that's okay. That's an okay range to start taking contracts. Um, Seeing how we're closer to that buying side, I am more leaning towards the buying side. Seeing how we have a lot of structure throughout a lot of tech right now that's telling us we're going to see the upside, I'm very bullish for that upside. Very likely tomorrow on the open, I'm probably just going to be buying a contract right off the bat. Um, Hopefully we're still underneath the 5 mile level so that I can grab that liquidity. I will be buying contracts for Friday and for a few weeks out, to fully catch this upside. Now, I did want to go over one last symbol really quick. You see NVIDIA. Now, very quickly, looking at dear old NVIDIA. Weekly time frame, daily time frame. Very heavy consolidation in that selling channel still. We're near the top of that consolidation range. Um, Potentially though, this could be forming a double bottom, and from that double bottom, this could be getting ready to form a breakout to the upside, especially because as you can see, there is a micro cup there. If I go to the 4-hour time frame, it's probably a lot easier to see. As you can see, there's that micro cup, potentially the formation of a micro handle. So this looks very good for the bullish upside. We're already kind of past the point of the head and shoulders. So unless we start seeing this pull downward and creating an inverse cup to the downside, then I am not looking for this selling channel to hold too much more weight. Very likely we will see Nvidia push out of this channel, start closing some of these gaps to the upside, and from there continuing to head upward. All right, that's going to be tonight's video. I apologize it wasn't longer and more detailed. I'm feeling very bad right now. Um, with that said, I hope you all enjoyed. Thank you all for watching. Take care with your trades tomorrow. I did very good with my scalps today. Hopefully we get the big breakout tomorrow. That'd be very nice for the scalps. Um, with that said, I will talk to you all in tomorrow's video. Thank you, everybody.